How does a blockchain network decide which information is right and which is wrong? And what keeps anyone from adding false information? Welcome back, guys. Today we'll be discussing exactly that. This video is all about consensus, which is a very important feature of blockchain technology. When we have a cryptocurrency, such as Bitcoin for example, you have this network of computers called nodes. They all need to agree on what is true and what is false. All the nodes that are part of the Bitcoin network have a copy of the blockchain. They all have a copy of the public ledger, the database with all the transactions in it. So when a new transaction comes through, they all need to decide, does this transaction make sense or not? In a future video, we'll talk all about miners and mining, but simply put, when a transaction comes through, these different nodes need to come to an agreement. Should we include this transaction into the blockchain or not? Because when a transaction is put into the blockchain, it's being accepted by the network. It's been accepted into the database, and that's when you can say the transaction is confirmed. So that's when we have consensus. So why are we talking about consensus? Well, because it's a very important feature through which you know that when a decision is made on a decentralized network, such as Bitcoin or some other blockchain-based network, that several parties were involved. This is the great thing about decentralization. You know that there's not just one single party that has decided something and nobody else had a say. But instead, you know it's a decision made by a network of entities, a group effort if you will. This is very important if you want to build a trustless system, and consensus is a big part of that process. Because of consensus, you know that at all times, all decisions are being made together. All decisions are being double-checked. What information is true and what isn't is being decided through consensus. So for Bitcoin, this means that when a new transaction comes in, everybody checks the ledger to see if it comes from someone who has enough funds, enough Bitcoin to make that transaction. And if everyone agrees that it does, then it's added to the blockchain and the transaction is confirmed. So with this model, where you have this network of computers communicating with each other, it becomes practically impossible to cheat. And we get a situation where everyone is confident enough that everyone else is telling the truth. Not because we trust them, but because we can verify it by checking the entire network and ledger. So this is the main idea. And this is what happens in many blockchain use cases. And consensus is a very important part of blockchain technology. Now, how do we reach consensus? For that, we need to understand that consensus is built on top of incentives. And incentives are the key to keeping everybody in check. Because why would anyone play by the rules? And this whole consensus system depends on the fact that everyone is incentivized to do so. In Bitcoin, for example, all of the different computers in the network are incentivized to tell the truth. So when a strange transaction comes along, everyone is incentivized to say, hey, this is false, this transaction should not be in the blockchain. This happens through a process that we haven't really discussed yet, which is called mining. So if you want to learn more about that, be sure to subscribe and we'll discuss it in a future video. But the basic idea is that when you partake in this process and you act according to the rules, you get a financial reward, in this case in the form of Bitcoin. So it's a financial incentive to play by the rules. It's all a bit more complicated than this, but for now understand that we have consensus, and that consensus is removing trust, and that consensus is achieved through financial incentives, and that people actually gain money by being honest, and that if you're being dishonest, you're actually losing money. And this is what makes the design of Bitcoin, the original blockchain, so good, because it taps into a basic principle in our society, which is that most actions are driven by financial incentives. We work to make money so we can pay our bills. And because we want to keep our job, we follow the rules set out by the company we work for. And the same thing happens with blockchain. The people who join the network, and especially those who help in the process of consensus, are incentivized to follow the rules because that way they keep getting paid. To know exactly how this all works, you need to understand proof of work, proof of stake, and other consensus mechanisms. But that's a big topic, and as I said, we'll leave that for a future video. Thanks for watching. I hope you enjoyed this video, and if you did, Be sure to leave a like, and I'll see you in the next one.